Okay, and hello there, everyone, and welcome to BR Guesty Industry Panel talking about travel and industry trends to help you navigate 2022. I am Vered Raviv Schwartz, President and COO of the leading property management platform Guesty, and we have a great panel for you today. Joining me are Thibault Masson, founder of Rental Scale Up, Jessica Gillingham, founder and managing director of Adobe PR, and Nicolas Galantini of AGL Atelier. He's stepping in for Simon Lehman, his partner that was supposed to join us and unfortunately had a last-minute call. So we will start with some opening remarks and data that we have to share here at Guesty about industry trends, followed by presentations by Thibault, Jessica, and Nicholas on travel and industry trends to help you navigate 2022, and ending with a panel discussion, which will address several questions that were sent to us in advance or that you might want to share with us during the session. So starting with sorry about that, with recapping 2021, a lot of us had concerns about the latest variant, our friend, the Omicron. But despite that, we saw increases in booking volume and average nightly rate throughout the holiday season of 2021. To give you some examples, New Year's Eve booking volume in the US was 32% up, compared to the previous year. And in the UK, it was 121% up compared to the previous year. Looking at the Christmas holiday and New Year's Eve in terms of pricing, Christmas was the most expensive holiday in 2021. And if we compare the numbers to 2020, it's 53% higher for the US and 99% higher for the UK in terms of Christmas. And in terms of New Year, it was also more expensive, 26% up for the US and 130% up for the UK. And if you're asking yourselves if the numbers are higher or lower than the 19 numbers, then for the US, it was higher than the 19 numbers as well, so 24% higher compared to 2019. And in the UK, it was still 31% lower than 19, but as you can imagine, there was a lot of recovery time in the UK, especially due to lockdowns in previous year. Another interesting impact of COVID-19 that we saw was cleaning fees. As you can imagine, we have hosts more concerns about the cleaning, also to assure guests that they can feel comfortable and confident traveling these days. And that resulted in higher cleaning fees that we observed. One of them is that the average cleaning fee per reservation in 2021 was $107. On average, 12% increase in cleaning fees across all short-term rental platforms. And we saw that since August, the numbers even increased further. And we saw a 15% increase in cleaning fees in fall, winter of 2021. A lot of it were impacted probably by the rise of new variants, coupled with the fact that people did start to travel more. So we had more travelers asking about cleaning as a very common question from our property managers. And as a result of that, property managers decided to invest more and as a result, spend more money on cleaning fees. We expect that trend to continue throughout 2022 when people resume travel or even increase travel trends, but still will be very cautious of the cleanliness of your properties. So you should be aware of that and still expect more cleaning expectations and more cleaning costs coupled with that. And if we try to look at to the year ahead of us, 2022, we see very positive signs, including the fact that people already book for their summer vacation, something that we have not seen in the first part of the COVID era. People had the tendency not to book too much into the future because they were concerned. But now we definitely see people interested in traveling, interested in planning ahead again, and being very confident about their ability to travel. So numbers are quite staggering, I believe. If we look at June to August, September, worldwide booking volume in the US, we see that already booking volumes for the summer are 126% higher compared to last year, 21, and 205% higher than 2020, which was the year of COVID. And if you're asking yourselves if we're higher than pre-COVID numbers, yes, we are 72% higher than 2019, meaning people are making up for lost travel time during COVID and are really looking forward to the summer holidays. Same with UK, 175% higher compared to 21, 63% higher than 2020, and only 10% higher than 19, but still higher. Remember, in the UK, it was really much impacted by the restrictions at that time in previous years. Same with Australia, 104% higher than last year, 159% than the peak of COVID year, and already 27% higher than pre-COVID days of 19. So all that makes us feel very optimistic. The travel is bouncing back and increasing dramatically after the COVID era that we've all experienced. And now to our wonderful panelists. Thank you so much for joining us, Thibault, Jessica, and Nicholas. It's great to have you on board. We're going to start with a presentation by Thibault at Rental Scale Up.
What I'd love to do is actually take you through 2 years of pandemic in 10 minutes. But actually what I want to really do with you is to try to understand where we are standing today. I think Vered had very great data and trends, and we're going to see these again through different angles, but it's really important you get them because we completely align in terms of vision, but through different angles. And you will see, for example, after 2 years of pandemic, we are at a moment where short-term rentals are very appreciated by customers, but there's a very different view if you are in the US, in Europe, to where you're standing right now. And we go over this, and also we talk about guest expectations. I've already talked about cleaning, for example, but some of these expectations are actually hard for some of us, some property managers or owners to deliver. And we'll see why. So as I said, that's a quick survey, but overall, between August 2020, February 2021, July 21, November 21, when people, for example, here in the US are asked which is the type of accommodation type that you prefer, what is accommodation type you prefer, hands down, short-term rentals and self-catering accommodations win, right? So basically there's a strong preference for what we offer. Not a surprise, but what it means again, it means that over the last 2 years, quite a few people have been introduced to our short-term rentals and our new guests. And what's going to be very interesting is to see whether we're going to be staying with us in the industry. So overall, globally, for the whole world, a data company called AirDNA says that last year in 2021, it was the best year ever for short-term rentals. Especially if you look at the summer for Q3 21 was higher than 2019, so pre-pandemic. We'll see it's actually not the case everywhere. Let's start with the US. It was so great in the US last year. It was the best year ever. Is it going to be the same thing this year or not as good? So it may sound counterintuitive. We'll see why. So again, in the US, we broke records, right? Since January 21, month after month, a measure like occupancy records have been broken month after month. Occupancy has been higher in 21 than pre-pandemic in 2018 or 19, right? To be fair, again, that's whenever you look at data, you have to look a step back. What I'm looking at, that's the overall occupancy for the whole market. Obviously, think about this. urban demand was really down. And what we know that over the last 2 years, a lot of people just made their listing on Airbnb unavailable if they were in cities because there was no demand. So some of these listings were not even considered here in this data, right? So of course they would have been empty if they were been active. So overall, what we really see here that the occupancy in non-urban markets have been really, really, really high. So what do we see for 2022 in the US? So I just talked about supply. So AirDNA thinks that supply will increase by 15% in the US. Again, for the reason that demand is coming back in the US to big cities. It is coming back definitely. Cities like Austin, for example, are doing really well. Phoenix as well is doing really, really well. So it means that people who had maybe dormant listings have turned them back on. As you may know on Airbnb, for example, you can snooze your listing, right? So just take a click to put it back on. So this will come back as demands come back. The other thing is that people have seen over the last 2 years that there was money to be made in our industry, right? So they've been building or opening up new vacation rentals, but it took actually more time that because of shortages in supply or supply chain issues to get these rentals online. They're going to be ready for this year. So for that reason, again, we're expecting more listings available. Prices. So Vera talked about how it was the most expensive holiday season ever, which is true. But overall, surprisingly, AirDNA thinks that the average daily rate, so it's price per night, let's say, will actually go down on average in the US this year. Sounds counterintuitive, but not really. Again, if you think about this, a city booking usually has an average rate which is lower than a booking in on a coast, in a mountain, or in a rural area. As we're going to get more urban bookings, it means the share of urban bookings will grow, and we get more of this lower priced bookings. Something also very important to understand in why the prices were very high on average over the year of 2021 is that summer was longer than before, right? Basically, summer went into September, October. So it means that you could have like summer rates well into September and October. That was crazy. It was a very long summer. So it means that over the whole year, people in the US were able to maintain prices higher for a longer time. So again, and we don't know. I mean, people say, yeah, remote working is here, but we don't know whether as many people will actually do remote working in the fall this year. Maybe, maybe not. If not, then again, shoulder rate season may go lower than 2021. Last thing, demand. So the growth of demand should slow down. Again, it's growing by 14%. So it means that the demand will be even bigger than in 2021 or 2019. Again, we saw that with Vered. So as we said, the question is, how high can we grow? Again, hotels will reopen. People will go to cities, and urban short-term rentals have to compete with hotels. And people also will want to go overseas. Europe, for example, Americans will go to Europe. So how high can demand grow at some point? It's also a matter of supply, as we've seen. Supply could be limited. How about Europe? So Europe was not as good. Q3, for example, was actually lower, 8% down compared to 19. So we were not yet on pre-pandemic level. But yet Q4 was almost 20% above Q4 2019. So what does it mean? Well, basically, since June 2021, Europeans have been crossing borders, have been staying in other properties or other countries. So what we saw in 21, it will be true as well for large part in 22, is that countries that have large share of our domestic demand, like Russia, France, United Kingdom, and Germany, and have a right balance of supply, will also do well this year. That's going to be but the good news is international travel is coming back in Europe. Countries like Croatia and Portugal, you see them on the left, not doing super well in 2021 because they don't have a big domestic market for the huge supply of places they have. They will do well. And we see this in the bookings already. Bookings in destination in Croatia and Portugal are doing really, really well compared with last year. Because again, cross-border is happening. Again, I'm going quickly through this. Again, we see this basically starting June, people were traveling in Europe. There was a big success from the EU in rolling out the same app across 27 countries. And you can be in Dutch and enter with your COVID app, Italian restaurants. It's working. People experimented this in 21. So to Vered's point, they are confident that it's going to work in 2022. So they knew this app is working. So that's why they're probably already booking high. And that's my last point on the trends here. You can see here, that's just for Europe. But if you look at the booking pace, so basically what it means that if you look at now how many bookings are logged or how many bookings people already have for Q1 22 in Europe, it's 83% higher than in 2021. It's somewhat similar to what Vered showed. Let's say it's huge. So we think that in Europe, it's probably going to be the best year ever, finally. But yet, as I said, expectations are getting higher. So can you deliver on what guests are expecting? That's also changes due to the pandemic. The first thing, cleaning standards are important, yes, but the issue we all have, and that's here above in the US and below in Europe, is the shortage on labor. That's all over the map, especially cleaners. And think about this: if you had properties in urban markets and didn't use your cleaner for 2 years, will your cleaner still be there? How hard it's going to be to find somebody? This could hinder actually the return of demand in urban cities, because there may not be enough cleaners. Another issue for property managers, that flexibility will still be important. For 2 years, people have been trained to ask for a flexible cancellation policy. It's still going to be the case. But flexibility also means more now, right? For the last 2 years, when it comes to e-commerce, people have been used to things like buy now, pay later, right? From Klarna, Affirm. And these kind of features have been rolled out already on Vrbo or Vacasa. As a property manager, how may you offer payments in several installments as these big companies do? That's a tricky bit thing to deliver. And last bit, people are still expecting faster and faster communications. And yet, there's been changes, for example, in the way Apple protects privacy of users. And nowadays, you're actually quite not sure whether people have actually opened or not your emails. So if you have guest communication sequences based on the fact that people have opened or not your previous emails, you're not sure whether you're reaching the right people. So these are really big things. So these are my conclusion for today. And if you're a property manager and, for example, you want to talk about these trends or get things done, you can join our network. We launched a network, a private network for short-term rental managers called Scalers Network, and you can join it. And for example, with mastermind groups, we help you get results. That's what we do at Rental Scale Up. And that's it on my side.
Thank you so much, Thibault, for the very enlightening presentation. And now, Jessica, please take it away with your presentation.
Thank you, Vered. And thank you, Thibault. That was really interesting to hear all of that. And what I'm going to talk about travel and trends for this year, and then also look at last year, but from a very different perspective from Thibault, and then also what Nico will talk about later. I'm going to look at it from a PR and branding perspective. And I'm hopefully going to give some sort of quite tangible ideas to the audience about how you can look at your branding as well as your PR over the next year. And the first thing I want to look at is some of the stories or the types of stories that made it into the press about the short-term rental industry last year. And as you can see, there's a mix of, they're all large property managers. There's one Guesty story there, but they cover a few themes. And these themes are funding, SPAC, going public, expansion, acquisition, and also data. And so just to give a sort of an idea of some of the key themes, there was a lot of other stories that made it in the press last year, but these are sort of good examples of the main stories that were out there. And if we look a bit deeper at what were the key themes of the industry over last year, what we saw was IPOs, SPACs, and a maturing of the marketplace for short-term rentals. We also saw the increased market share of short-term rentals, in competition, if you like, or as opposed to hotels. We also saw data being used data being used to tell a story about the industry and the growth. And Guesty did a really fantastic job last year of providing data about the industry. So did AirDNA. Like, we have real insight based on figures last year. Also, visibility. The short-term rental sector has, like, I've been in this sector for about 5 years only in this sector, and the visibility and the significant press interest in short-term rentals just absolutely went up a notch last year, as well as we're seeing investor interest. We're seeing more M&A activity, and also business models, the emerging and changing business models of property management, the hotels coming into the space, property managers going into hotels, other types of lodging verticals, all kind of converging and mixing. That has been an increasing theme of last year. And then finally, brand. More and more property managers of all sizes are focusing on their brand in order to differentiate themselves and to grow. And if we look at things from a PR perspective and a branding perspective, what are the bits that make a good story? And really, it's these 4 things. If you haven't got one, preferably more than one of these 4 aspects, either news, insight, data, or context, how a story fits within the wider industry, the wider community, the wider world, then you haven't got a good story. You need these 4 things. And when I showed that first slide about the example of news stories that we saw last year, you know, news, if it's news, there's really only 2 things that make news, and it's mergers and acquisitions. The rest is insight, data, context, giving stories, explaining the industry, conversations, what's going on, all of those things. Now, I also want to talk about guests, because at the end of the day, you know, guests are the ones that are staying in your properties, and everything is changing here. And here are some of the key themes around what's changing for guests and what is it that they really want. We're seeing changing booking patterns. People are staying longer, later, sooner, fewer, outside of the core seasons, staying for longer night stays, all sorts of changes in the booking patterns. We're also seeing changing expectations for automation within a property and technology. So the technology when you're in a property, in terms of smart, smart locks, energy efficiency, all of that stuff, but also technology when it comes to communicating and booking. We're also seeing seismic shifts in the way we work and live. And this, you know, I think of this as almost a revolution, and I don't think we're going back. We have, you know, the change of flexibility of being able to work from home, hybrid, work from anywhere is not changing, and it will have massive impact on the industry. Also, that increased blending of travel purposes, that bleisure, we used to call it bleisure, but, you know, going somewhere for a mix of reasons, whether it's for work, pleasure, family, it's blending that travel purpose. And then we're also seeing that guests are looking for wanting more flexibility and merging of their lodgings. Plus, we're seeing a greater emphasis from guests, and this will be something that will increase, of wanting to buy from businesses that have purpose and have good creds. And I'm going to talk a little bit more about this later on, but this is a really important one. This will only increase. Plus, guests are having higher demands for their wants and needs being met. Like in Thibaut's presentation, you know, that they're expecting really instant, even more instant communication, etc. So how do you overcome challenge? So for most property managers, the biggest challenge, or the biggest stakeholders that you're looking to influence are around these challenges. It's around increasing your inventory or getting better quality inventory, better relationships with your owners. It's also, and this is new for the last year, has been about attracting talent and attracting the best talent. So whether that is unskilled or skilled, it's a major problem across the world at the moment. So it's a challenge, and part of your brand and PR strategy will be around that. Then it's also about partners. influencing the right partners for you. And then the fourth stakeholder group is your community. And within that, it would be the regulators, the local government, the national government, all the kind of bodies that are within the community that your business operates in. These are four stakeholders that you'll be looking to influence. So if we're looking to redefine your brand strategy for 2022 and beyond, if we think about what's changed in the industry, what's continuing to change, what's changed within the dynamics of what guests want and traveler behavior, as well as problems with supply and regulation problems that are, you know, always in the ether. These are the three things that your brand strategy should be doing. It should be increasing your reputation. And by having a solid reputation, you gain trust. Partners trust you, owners trust you, guests trust you. And that's through building your reputation. And then because you have trust, you're able to influence. You're able to influence buying decisions, strategic decisions of owners, all other kinds of decisions within the government regulators. You're able to influence the marketplace as well. And those are the three things of why your top line strategy, why you would want to focus on your brand for 2022 and beyond. So something that that is very much coming on the agenda for all businesses is around impact, and it's around not just revenue. It's not just about, you know, getting room nights booked. It's about profit, but people and purpose. And businesses across the world are needing to look at this. They're needing to look at their impact, because the best talent only wants to work now with companies that are doing good in the world, or are places where they have good culture, or there's really great purpose. And we've all seen in the news the Great Resignation. There's our expectations of what we want from our lives. It's changing, and it will only continue to change. And that includes also the consumer behavior and what consumers are looking for when they're purchasing something. So a large part of your brand, or part of your brand strategy, needs to look at what your impact is and what you stand for. Now, ESG is something that we are literally only just talking about in the short-term rental sphere. You know, we talk about making sure we've got the right soaps, or you know, making sure we're using eco-friendly cleaning products, etc. But it goes way beyond just those things. It really is about how your business fits and operates, both in your local area, within your teams, and the environment. And ESG is something that within real estate is becoming a significant part of what's happening in real estate, and it will also be what happens in the short-term rental industry. It'll have a far greater emphasis. And then it's also about being able to communicate what your purpose is. What's your mission? What is it you stand for? Where are you going? You need to be able to articulate your mission and then communicate it to those four sectors, those four stakeholders that you're looking to influence: the owners, the guests, the talent, the community. And then also about giving back and being able to communicate your value. And finally, communicating greatness. So when you're looking at your PR strategy or your branding strategy, you'll be really looking at how you can communicate your greatness. And these are the four areas to be thinking about. It's your leadership. And if you're communicating with purpose, and you've got a mission, and you're able to show that through data, thought leadership, etc., you're communicating your leadership. You're also sharing insight, an insight to the marketplace. And property managers, you can do this by sharing your knowledge about your guests. You can share your own booking trends. You can share search trends that you're noticing on your Google search consoles. And you can share insight, whether it's on a macro level or a micro level, local, national, etc. You've got insight to share. And then it's also that share of voice, being able to compete with your competitors and also other lodging providers within the locale that you're operating. It's having that share of voice and having consistent visibility, being out there on your own channels, but also third-party channels, is really important to continue to just build your brand. So those are the main kind of points for the trends that I'm seeing, and certainly that I think are really important for the industry to be looking at for 2022. So I'll leave it there, Vered, and looking forward to hearing from Nico.
Thank you, Jessica, for the insightful presentation. I feel that I agree with everything you said, and we're seeing very similar trends from our customers. And last but not least, Nicholas Gantini from AJL Atelier will provide us with some outlook for the year and some actionable tips for increasing your revenue.
Absolutely, Vered. And thank you very much once again for the invitation. A lot of things that I would speak about will echo what have been said by Jessica and Thibaut. And there's, of course, lots of good news across the industry, but also some caution to have, and that will depend on where you operate, the type of properties you operate. But in the end, there's a lot of things that are highly positive about the short-term rental industry, and we're going to dive into that together now. So before we get started, so we are here to speak about the travel and vacation rental industry trends and how property managers can prepare for the year ahead of them. So here, before we get started, I would like to give a very brief introduction of who is AJL Atelier. If you want to hear more, you will have my email at the end of the presentation, and we are more than happy to discuss that with you and see how we can help your business. So AJL Atelier, we are a consultancy that specializes in vacation rental. We only work with vacation rental stakeholders. We work with all the stakeholders in that industry, but we are 100% focused on the short-term rental industry, simply because we are passionate about this industry and we live and breathe day in, day out vacation rental. So that's our sweet spot. That's what we love. And that's where also our expertise lay, and that's where we are able to add the most value to our customers. Our vision is to help our client provide the best hospitality in the world, always raising the bar of travel rentals. Our mission is to provide our clients with the best tools and expertise to spearhead the industry's growth, because of course, not every property management companies are made equal, and we are here to help our clients implement best practices across the organization, have a rock solid strategy to prepare and future-proof their business, and also work on some more granular topics where we can really help them optimize with aspects such as operation, adoption of technology, mergers and acquisition if it's a part of your strategy, but also profitability enhancement and revenue management. Jessica touched on that, but I'm going to come back to that later. So first of all, what's happening in the market? We've seen a lot of data from Guesty, from Thibaut, from Jessica as well. And there's one, I think, underlying trend of short-term rental, and something that has been catalyzed by COVID is the demand for vacation rental and the category awareness of vacation rental. So demand for vacation rental is at an all-time high. People might not be traveling in the full capacity as they might be wanting to, but the demand for short-term rental is at an all-time high. Let's look a bit at some surveys that were run from 2019 and others that were more recently published. In 2019, Focusrite did a survey with US travelers, asking them about their accommodation option when they travel and their preferences. 54% of the respondents were considering short-term rental as an option for their holiday, but only 30% were ending booking a vacation rental. In 2021, in July, Generally and Europe Assistance ran another survey with US and Europe travelers this time. 71% of the respondents declare they will book a vacation rental within the next 18 months. So by the end of 2022. It's actually huge. Earlier during this presentation, Thibaut asked if we could retain those customers in short-term rental products. Deloitte published a survey last month, and 75%, it's a staggering number, of the new rental travelers tend to include vacation rental as an accommodation option for their future travel. This is huge. It means that the demand and the category awareness and the popularity for short-term rental has doubled in 2 years. You were speaking about seismic shift before, Jessica, and I think that's another one. And it might be hard to see when you actually operate properties in very challenging and uncertain environments, but that is the macro trend around short-term rentals. Twice as much people want to book and will book vacation rental or rebook vacation rental compared to 2019, which was the year of reference for the industry. So that's a very important data point to consider. because the supply will not follow the same dynamic. Thibaut has shown that to us. There will not be twice as much properties available on the market. First of all, because those properties are not there. Secondly, because of regulation, which is still the main threat and what can clamp down the supply for our entire industry. So the supply will not follow the demand dynamic. And as travel recovers, we can imagine that, well, this good old supply and demand law will play its role, and that the industry will recover even faster, contrasted with other hospitality verticals. But there's a but. Not all destinations are recovering equally. Thibaut spoke about that. Of course, here is data by AirDNA, once again, about occupancy rates in April 2021 compared to April 2019. We clearly see that the smaller or the more rural the destination is, the bigger is the upside. The larger the city is, the bigger is the downside. That's the reality of it. Of course, cities have not been as attractive as they were prior to COVID. Lots of attractions were closed. 30% of tourists in Berlin are going there for the cultural offering. That cultural offering is not available. Well, those people are likely to go to a resort destination to basically spend some time, enjoy some nature, etc., etc. So that's what we are seeing, and it also impacts the strategy. So if you're, let's say, rural or leisure property manager, you should act in one way. And if you are a urban property manager, you should have a completely different strategy, because the reality, the playing field is unfortunately not the same. It's the same in the UK. If we look, large cities, so London is extremely down in June 2021 compared to June 2019. But on the other side, the Isle of Anglesey or Lancaster and Blackpool are much higher. So we see the same pattern across the UK. And of course, there's a lot of nuances in between, but I only have 10 minutes, so I will not dive into that. But that's the pattern we are seeing. So leisure destinations are recovering super fast, and urban destinations need to show a bit more of resiliency in order to reach that recovery that everyone is expecting. So, harnessing those trends, how property manager can capitalize on these new trends and make the most out of it for 2022? So, first of all, leisure destinations, it's an absolute scream for revenue management. There's no other way to put it that if you're not doing revenue management in 2022 as a property manager in a leisure area, you're missing out on a huge amount of revenue. And that goes without saying, and I think no one can really question that. Of course, it depends on your destination, but most of the destinations are seeing the same trends. If we look at data from Home2Go, the average booking value for bookings with a check-in date in 2020 were $1,400 as of November 2020. The same date, November 2020, the average booking value for bookings with check-in date in 2021 is 3,200 euros. So it's more than the double. So it's huge. There's a few aspects that will enter into that change. So higher demand goes in line with higher booking value for property manager. This trend is explained by two things. On one side, you have increased ADR, as Steve was shown to us earlier. But on the other side, travelers are booking properties with more amenities, such as a swimming pool, a garden. Of course, if you were stuck in lockdown in a small city apartment, the first thing you want to go is take your family, go to the countryside. Remote work enables you to book outside of the city, and you're likely to look for larger properties with more amenities so you can actually enjoy that property. So revenue management is a key aspect of revenue growth for property managers. So people really need to implement and execute a revenue management strategy. But as Jessica said, there's revenue and there's profit, and those are two different things. Oh, sorry, let me go back. Okay, so leisure destinations. First of all, adapting rates. Secondly, targeting domestic demand. So adapting rates is revenue management. Domestic demand is more related to distribution. Of course, international travel will recover, but it's unlikely to recover to pre-pandemic levels until the end of this year. So you still need to target your domestic demand. People might not be able to travel in the same capacity they had prior to COVID. And we've seen at AGL that clients who were able to target their domestic market had a completely different recovery if you contrast that with the data from the market where they operate. So adapting a revenue management strategy and the relevant technology is absolutely key to benefit, one, from the redistribution of travel, and two, from the pent-up demand. Here, I like to differentiate the revenue management strategy and the technology. quite often there's this misconception that dynamic pricing is revenue management. Dynamic pricing is the output of revenue management. It automates the change of prices for property manager according to some market factors that the algorithm can pick. But it doesn't prevent you from having a revenue management strategy. And to ensure that higher ADR and occupancy actually support the recovery of your business, you need to understand the cost drivers. Property managers need to understand the cost driver of their business to ensure that every property and every bookings are actually profitable. It doesn't matter to create revenue if you're operating, if you create 20% more revenue, but your costs have dramatically increased because of the labor shortage, higher expectations that we discussed before, then that you will not benefit from this higher ADR and higher occupancy. So property managers really need to understand the cost structure of their business and understand how likely their revenue management strategy will generate profits for their business. And if it doesn't generate profit, well, you need to implement changes either structurally because there's too much cost, or on the revenue, or improve the quality of the product that you're selling to guests. As I said, international travel is still recovering. So focusing on your domestic market is key. It requires a few things. First of all, especially if you're a market that is an inbound market, where usually you have guests that come from abroad, is to have the property content in the language of the country where you operate. It's highly unlikely that a Spanish guest will book a listing in English, or a French guest will book a listing in Spanish, for example. They are much more likely to convert those bookings if the listing is presented in their own language. And then you also need to adapt your distribution strategy. Some channels are extremely good to bring American guests to Europe, for example, but they are not good at bringing French guests to France. So you need to understand what are the key distribution partners you can work with and adapt your distribution strategy to it, and also adapt your distribution strategy to the specificities of your domestic market. Additionally, domestic travelers are also easier to target from your own website. So here, own website or guest database, basically. So here we touch on the issue of branding that Jessica has mentioned, but also on the issue of direct distribution. Direct booking has kind of been the talk of town during the pandemic, following the cancellations from the OTAs, but now it's really time to deliver on that strategy and to have a direct booking and repeat booking strategy. It's key, first of all, to reduce your distribution costs and dependence on OTAs. Secondly, to find demand where demand is actually, and third, to increase the profitability of your business. So here it's crucial for property managers to implement a direct booking strategy. And from our side at AJL, we've seen a dramatically different reality between our clients who are able to generate their own demand and our clients who are fully dependent on OTAs. It's night and day. It's not even comparable, because when it's simple, when the OTA said, okay, there's no demand, we don't spend on performance marketing, or when Airbnb said, well, we are not spending as much on performance marketing as we were before, well, the first one who've been impacted by that were the property managers who were only working with OTAs. Because OTAs too were in a very hard situation, and they had to take decisions, and they had to cut on some expenses. And once they had made redundancies, the second part they could cut costs on was basically the performance marketing and their investment in driving eyeballs to your properties. So if you're 100% reliant on another business to make your own business function, and that business says, well, there's no one traveling to Spain this year, so I'm not spending any advertising on keywords related to travel in Spain, then you will not get bookings to your property. So it's increasingly important for property managers to build their direct booking channel. It's not made in a day, it requires effort, sometimes upfront investment, but in the end, it definitely pays off. And we've seen that during the pandemic, and we will continue to see that after the pandemic. There's no question to that. So now let's move to the cities, the urban destinations. And here the recovery is much lower. So here's a timeline that was made by AirDNA. So we estimate that AirDNA estimates that the urban travel recovery will begin around the half of the second quarter of 2022, and the urban demand will have fully recovered to 2019 levels by 2023. This means that urban property managers still have 1 year of resiliency to show. But in the end, it will definitely pay off. So there will be a lot of light at the end of the tunnel. It's just a longer tunnel that everyone would have wished. But hold on, there will be, and there's ways to protect your business from the effects of a pandemic, of a third year of pandemic, and to be here to actually benefit from those trends we've been discussing. So our recommendations for urban property manager is the need to remain flexible. We spoke a lot about new business models, blending of asset class, blending of use of properties, the pleasure that Jessica mentioned earlier. That's really important to understand. So short-term rental demand will recover by 2023. So property managers need to adapt their distribution strategy to make the most of any demand available. The first thing is to target longer stays. For example, from corporate clients. It's a great way to increase revenue during as short-term bookings slowly recovers. And if we look at the behavior of guests towards accommodation and their preference toward accommodation, the business travelers are also leisure travelers at some point. So we can expect they will have the same preferences. And where they were massively going to hotels before COVID, we can also expect a massive shift towards short-term rental for this type of bookings. And now there are booking channels who specifically target that segment. So I would like to mention Alto Vita, for example, but there's also others who specifically provide demand for short-term rentals and other type of accommodations from this client segment, who's unlikely to book properties on the classical OTAs because there is a difference in the booking process. Then third point, domestic demand and staycationers are also relevant in urban destination, but with a limited impact. Of course, if you're French, you would like to visit Paris without those herds of tourists, and you can actually enjoy the city. Or if you're Spanish, you would like to go to Madrid without all those people from abroad enjoying cheap beers and maybe not behaving the way you would like people to behave in front of your family. But it has a very limited impact. And then, two more tips to close that. So we recommend property managers to focus, of course, on the cost structure of their business, trying to move fixed costs to variable costs, so they know they can adapt to the recovery of the business, and they have more flexibility. And then last but definitely not least, for financially strong companies, it's also a great moment to grow your supply, either by acquisitions or by targeting new owners. If you have better performances than your overall market, make sure that owners in your city know that, so they can be attracted to your own property management business. You can grow your supply and the recovery will be even stronger for your business. That's it for me. Thank you. If you want to contact us, there's our website, www.aglatelier.com. My email address is nicolas.garantini@aglatelier.com, and you can also contact Guesty. They have all of our contact details, and they will be more than happy to follow that on. Thanks a lot, and let's see you on the other side.
Amazing. Thank you so much, Nicolas, for all this helpful information. And with that, we'll continue to our panelists again, Jessica, Nicolas, and Thibault. Great to have you with us. And I will start with a question that seems obvious. After 2 years of COVID, we are seeing the world around us being increasingly virtual, and that has really accelerated over the past 2 years. And I don't know, maybe in a couple of years, we'll find ourselves traveling in the metaverse, right? And with that, I did want to ask you, how do you think this increased digitization of the world that impacts every part of our life will impact travel patterns going forward? Jessica, would you like to start?
Yeah, I'd love to, Vered. And it's such a fascinating topic because we don't know really what's going to happen and how it will impact us. If we think about the impact the internet had on our lives, this is the next thing. I feel, and I don't know if anyone's has seen that parody by, I think it was Iceland, after Zuckerberg did his kind of big long talk about the metaverse, and they came up with this fantastic parody about actually, the real world is out there, and it's very funny. You should look it up. So my view is that it will have a massive impact on our lives, absolutely. But on travel, I see it as a positive. There's two reasons for that. One is, and it goes hand in hand with this flexibility, this fact that, digitization means that we can do our jobs in all different places. We can connect in ways that we didn't even really know was possible 2 years ago, but certainly will increase. So where we actually do our work will change, and we'll be able to travel with that, stay in different places, whether it's domestically or internationally. So I think it will just increase people's ability to travel. A second possibility also is that if we're in the metaverse and we're traveling to India or on safari in South Africa in the metaverse, it's just a great advert for us to actually go there and book a trip. So I think it's just a really positive thing for the travel industry, and then particularly the short-term rental industry, because no one stays in a hotel longer than 3 or 4 days, so it's but it's really interesting to see how this is all going to play out.
Thibault, Nicholas, any different thoughts that you would like to share?
Yeah, if I may, I agree with Jessica. We don't know, but we can imagine a few things. And if in terms of short-term rentals, right? If I look at my places, right, what does it mean? So there's been surveys from both Booking.com and Vrbo asking people what they wanted in 2022, guests what they wanted, and it's a bit schizophrenic. They say, "Oh, I need strong Wi-Fi because I want to do remote working," and sometimes they say, "I want to disconnect." So you're like, how can you do both? So it means in terms of marketing, by the way, if you're marketing your properties, you have to show you have strong Wi-Fi and people can also relax and disconnect, which is a bit weird. But anyway, but what it really means, it means basically the first level of connectivity was like having Wi-Fi. Then it was like having Netflix. Then connected fitness, Peloton and the rest. What it really means here, you need already right now to provide the seamless experience to people. They, have studied a movie on Netflix at their home. They come to short-term rental. They want to pick up the movie where it stopped, or even their fitness programs. It's right now I'm talking about, right? So metaverse, well, let's see what's going to go. But I think if I link back to the survey I showed at the beginning of my presentation, where you saw that business hotels were hit very hard, I'm afraid the metaverse is going to hit the hotels first. Look at that. We're having a business meeting right now on Zoom. It's probably, Bill Gates, let me start quoting Bill Gates here, but says that in 2 to 3 years from now, business meetings will be happening in metaverse. So, if you're a hotel, if you own a business hotel, that's not good news, right? The conferences or some events will move to that. So I think that's good news for us. Short-term rental, we should be away from that. But it does mean that you have to think how to provide this seamless on and off connection. People want to be connected and disconnected. So you have to provide basically a very good connection, internet connection first. That's the first step.
Nicholas?
I think I cannot add anything. I think mostly it will help with marketing and helping people discover new destinations, and also an improved expectation management from guests. Because it's easy to make a room look bigger in a picture, but maybe let's say a closer representation in the metaverse would give a better taste of the property or sample of the property to potential guests. And I think it can trigger even more people to go beyond their conception and what they would expect from a destination they have not yet visited.
Thank you. And just to add my 2 cents, I experienced a few virtual conferences during the past 2 years, and everybody was just so happy to go back to real conferences, meeting real people, eating real food. So I don't know. I don't see that really replacing business travel altogether.
Well, I would say, Vera, as we all know the reputation of the Guestival, the events you have, not every business meeting provides the comfort or the care that Guesty provides. So probably the people organizing great events will still see people coming. I agree with you.
Can I add something there? And the good food. Guestival has the best food.
Thank you so much. We're all in it for the food, right? Now here's to a more business-oriented question. Thibault, you work with vacation rental companies and help them define their strategies and goals. And of course, I don't want to go into specific details here, but can you share one critical goal or KPI that you would recommend all vacation rental businesses should be looking at?
Sure, Vera. And I think a lot of presentations talked about, in a way or another, supply, right? We talked about acquisition of property management companies to grow supply, or new supply coming back because of investment, right? Supply is very important. And when you look at supply, you want to look at the ratio. So bear with me. It's basically a ratio of your cost of acquisition. How much does it cost you to acquire one more property, right? And then you want to compare that over the lifetime value of a property. Like, for example, if on average you keep a property for 5 years, how much money are you getting every year or over this total 5 years? And if you compare that, it's very important because it's kind of telling you, okay, that's how much money I'm going to make with one additional property over 5 years. It's guiding me in understanding how much money I can spend to acquire this thing. And this ratio is very important because most of the time we underestimate the value that an additional property can bring. And I think a company called Vintry said one additional property is like 100 more bookings. So to think about that, you have to think like, if I'm about supply, I want to be able to measure a ratio, so cost of acquisition over lifetime value of property. And this way kind of tells me, if I'm comparing my acquisition campaigns, for example, of supply, I can start comparing where I have the best ratio possible with the lowest acquisition and the highest lifetime value.
Thank you, Thibault. I hope our audience will be able to use this very important metric. And Jessica, going to your expertise, there's so many marketing and communication channels out there now, which is your expertise, of course. So what would you recommend to start off with as a new property manager or as a property manager trying to increase their brand presence?
It's tricky because there is so much choice out there. And I would say that firstly, getting your own content together. So making sure that you're actively doing regular content that speaks to the audience or the persona, the traveler persona that you're looking to attract to your property. And having a place, so having a website where that content's housed, but then getting it out there on your own channels. And that would be either your social media or building an email database and doing it that way. Because increasingly trying to get that direct booking stuff is what property managers would do. And probably another tip I would say is sign up to Thibault's Rental Scale Up and have that information because, he's the expert on how to build your bookings, particularly, direct as well. So I would be doing that.
Great. Thank you so much. And I can't not ask the next questions, and Nicholas, you might be the expert for that. We've seen the major funding rounds, acquisitions, IPOs, everything that has gone in 2021 that actually our industry has not experienced in previous years. And what do you foresee for 2022? Do you think that we're just starting this wave and it will continue, or do you think it will slow down?
I don't think it will slow down. Honestly, and we speak with a number of investors interested into the space, and the interest of investors into the short-term rental industry is also at an all-time high. So there will be consolidation in the software space that is inevitable. I think Amiad spoke about that the other day as well, and that's basically something that is going to happen. That it needs to happen. Vacation rental is perhaps one of the only industry where we have local softwares, which is a bit of a contradiction in itself. So the industry will keep consolidate. The property managers also will want better technology. So they are likely to go or to be attracted by companies who have more resources to develop the product they need. So we are absolutely going to see a continuation of those investment rounds, mergers and acquisition and consolidation into the industry. On the property management side, it's not exactly the same because there's very few companies at the top. You have the Vacasa, the Evolve, the Sykes Cottages. Those companies, I wouldn't see any valid reason why they would not continue to grow their supply by acquisitions. It's been quite successful for them in the past. Not Evolve, they always done that organically, but others like Sykes or Vacasa have conducted more than 100 acquisitions, if I'm correct. So they will continue to do it. So that's something we're continue to see. It's going to go faster on the technology side, but it's still going to happen on the property manager side as well.
Great,
and
thank you.
One additional thing I would like to say is also the convergence between real estate investment and short-term rental. You've cited Casai before. Casai is working in Brazil with a fund that was constituted to buy properties that will be exclusively managed by Casai. And that's something that is quite new. There's also a company called Edgar Suites in France who raised 105 million, 5 of which to develop the business, 100 of which are here to acquire properties. So we're going to see more convergence between real estate, classical real estate, and short-term rental, and also a mixed use of product or repurposing of some real estate assets, such as office buildings, student housing, who will become more, will transform into more supply for short-term rental. So yes, definitely this will continue and potentially accelerate as the industry recovers.
Thank you, Nicholas. And that's a very good point. I think we see a lot of diversity in the portfolio and the models of our customers, and that blur between travel tech and prop tech and real estate investment and real estate management. So I'm sure we'll see a lot of very interesting things in 2022. I have so many questions and so little time. I do want to end with one question for all of you. A lot of been said about hotel versus short-term rentals. Do you see the lines blurring? Are you seeing them as already blurred? And what is your expectation to the continue of that relationship between hotels and short-term rentals next year and going forward?
If I can, if I can start on that. So for years, we've been speaking about the convergence of models from short-term rental towards hotels, because they are kind of the big brother. What we are seeing now is the convergence of hotel towards short-term rentals. And I think they realize if you can't beat them, join them. And that's actually what they are doing at the moment, because we see a lot of big hotel chains who are investing into short-term rentals, such as Marriott with Homes and Villas by Marriott International, hotels who are opening villa resorts, for example, into some hotel brands who are opening villa resorts in some destinations. They simply know their customers are drawn to that product and the privacy it produces. So as an hospitality business, because it's not one or the other, in the end, we are all providing hospitality to our clients. As hospitality businesses, we're going to see more and more business who actually do both. They might have one hotel in one city, 20 villas in a resort destinations, a building of apartments in an hotel. Hotels might also turn hotel buildings into apartment buildings, because that's also what customers are wanting. So the lines are definitely blurring, but the direction of the convergence is the opposite of what everyone has been thinking about for years. And it's also on the technology side. We see lots of tech companies who have pivoted from short-term rental to the hotels, because the hotels have just realized, wow, there's all that amazing tech that enables people to run decentralized hotel with no hospitality experience, no prior hospitality experience. Maybe we should try that and lift our standards with that technology. So definitely it's going to happen more and more.
Can I add into this as well? So that's also what we've seen, is that the technology companies that were very much short-term rentals since COVID, many are also looking at hotels. And the other thing is that hotels, definitely they're looking at short-term rentals, and often it's hotels that might be distressed and struggling and thinking, well, if I put a kitchen in here, will I get more bookings? So we're looking at that as well. But I think also what we're seeing is that further convergence. So student accommodation turning into short-term rentals, co-living turning into short-term rentals, long-term, short-term rentals, that sort of flex. So that sort of lodging is going across all different types of asset class, and it's difficult to, there's always going to be a place for hotels. We're never going to get rid of hotels. There will be some travelers that will only ever want to stay in a hotel, a branded hotel, but all the rest is merging, and it's just about giving that choice as well.
Yeah, no, to that point, if I may, would add, yeah, just a few days ago, a company went public called Sonder in the US. And Sonder is the epitome of what we've been talking about, in the sense that they somewhat started as like having leases to rent huge buildings and have like apartments in there, so more short-term rental side. And then in cities where they could not, where short-term rentals are still illegal, right, in some areas, they got hotel licenses. So now they have hotel / short-term rental thing. I'm not sure how to call this. Basically, I read an article in on a hotel website. They call this the Airbnb hotels. So exactly the point of Nicholas, things it's changed. Now these things are Airbnb hotels, where it means basically it's like places where you have apartments, and they actually telling hotels to inspire themselves from this and to reduce costs, for example, with full automation, removing front desk to look a bit more like this generation of apart hotels or service apartments, whatever you call this. That's very interesting. And second point, though, the convergence in distribution happened in a way already. Like Booking.com, for example, has always been selling side by side short-term rentals and hotels, right? Airbnb said they were pausing hotels for a while, but they still are offering hotel room nights. Boutique hotels are still available on Airbnb. That's not going away. So the only point I would point out is that Expedia is a bit tricky. We don't know whether Expedia is adding or removing vacation rentals from their website at the moment. It's a bit more tricky to understand what they're doing here. But just to say that in terms of distribution, that's why it's really important to look with Guesty, look at the channels, right? Some channels may be better or not for you to offer short-term rentals, especially if you have something product that's closer to the hotels, going to offer some services just like hotels. You may also want to be on websites that are very good for hotel-like properties. So check with Guesty.
That's a very good point. Thank you, Thibault. And thank you, Jessica, Nicholas, and Thibault, for a fascinating discussion. I found it extremely helpful. And I would like to, before I bid you all farewell, to invite you to our next virtual meetup on February 9th, where we'll be talking about protecting your properties, tools to mitigate risk and maximize revenues. Happy to see you there as well. And as we mentioned, don't forget to save the date for Guestival this year in September, Austin, Texas, our first US depot of the Guestival event, and would love to have you all there. Of course, if you have any questions whatsoever, if we didn't answer or any of our participants didn't answer any of your questions, feel free to reach out to Guesty or to any of them directly, and we'll be happy to help you. Again, thank you, Jessica, Nicholas, and Thibault, for a great discussion.
Thank you.
Happy 2022 to everyone. And thanks for the invitation.
Thank you.
Thank you.
Thank you, everyone.